me or just the medication. So do apologize for that. Just for basic housekeeping rules, I'll wait for everyone else to actually log in. Right? If you have a question, you can press the raise your hand button, and I will actually unmute your mic. You'll be able to speak, and yeah, we'll be able to have a conversation, and I'll answer any question that you might have. Or alternatively, you can type in the chat box, and I will be able to read out loud your question firstly, and then from there on, obviously proceed to answer it, so everyone knows what the actual question was. And I mean, if I feel like the question is relevant to what we're discussing today or right now, then I'll address it. If not, we'll probably hold it in for towards the end of the session, right? Or if not the end of the session, we'll do it in another session, or you can just ask me that privately. Okay. The thing is, we don't want to confuse guys who are at a certain stage, right, by giving them too much information which is not quite relevant to them at this present moment. So just please bear with me on that one, guys. I do understand that there's a lot of excitement sometimes when you're learning something new, and there's just something that you saw today, whether it be on YouTube or whatever the case may be, and I mean, you just want to ask it. So let's just make sure it's relevant to whatever we're discussing today, and yeah, let's feel free to ask questions. And last session we actually did moving averages, and I'm not quite certain, but I think I do remember posting the link to the previous video that we actually did with slides, right? It actually has the slides on how moving averages are derived, why they are so important, how the retail trader usually use them, and how an institutional trader would actually use them, and what are the benefits or what type of ways, including like using it as a support and resistance or a breakout sort of like tool. So there's a lot of different ways and methods that you can use along with moving averages. And we're talking about two moving averages in this instance, namely the 200 as well as the 800 EMA, which make up the bulk of what we use when it comes to strategy number one. Okay. So as I said in the previous video, this is more of the practical side that we're going to take a look at. And we're just going to look at a few examples. And if you want the more theoretical part of things about how and why these sort of numbers or these sort of tools work on a consistent basis, then it's much more prudent to just go through to one of the previous sessions. I'll re-upload it again, or rather I'll repost the link in the Telegram channel because I've already uploaded it on the YouTube channel. So you'll just be able to watch that. And just make sure you're following on the 3 strategies. Okay, the PDF, the ebook, just make sure you have that open up, and then sort of like to get that theoretical information surrounding moving averages and how you can then use them to effectively to get, I can say, high probability trade setups, right? To filter your trades and also to use them as exits, because that's not the only use you can use a moving average for, is just for entries, but also it's important for exits as well. Okay. Now, largely, if you look at markets, right? If you look at moving averages and you look at markets generally, if you were to remove the candlesticks themselves, right? Candlesticks themselves, and just look at the moving average, right? So if the green candlesticks were black and this was the only thing that was showing, I mean, from there you can generally get an idea of what the market is actually doing. So if we were just to focus on the red line, okay, I mean, it's pretty simple and easy to see that, okay, over here we have sort of like ranging markets, okay, the wrong shape, it's to rectangle, right? We have ranging sideways movement, and the market breaks out of this sort of like range and starts to move up. Okay, so from here the market was heading downwards, which means it was a downward or bearish trend. And with that being said, it's something that you can easily identify on the chart without you having to draw trend lines, right? For one, okay. I'm not saying there's anything wrong with trend lines, but you don't necessarily have to do it, because you can do it. You can determine the actual trend just by looking at the moving average relevant to the price. Okay. So as I previously said, price moving below the moving average, that's a downtrend, and price moving above the moving average, that is an uptrend. Okay, very simple, straightforward stuff. Now, therein comes the question regarding how we should then actually make a trading decision. Okay, now, if you've been around for the previous sessions where we did actual candlestick patterns, right? And we looked at how the Fibonacci works and how we can implement the Fibonacci retracement tool within our trading to ensure that we get really good entries, right? Predefined entries, right? Because I mean, to me, that seems a bit more important than just having erratic trades where you just go in, right? You open up your laptop or your PC, you switch that on, and all of a sudden you just see a setup, right? Instantly, because that used to happen to me a lot. Well, it's still okay. All right, guys. Believe we're having some network issues now. I'll make sure that I keep recording this. So if you miss any parts of it due to the network, then you can just rewatch the whole thing again, or just the parts that you actually missed. But in any case, let's continue, guys. As I was saying, if then you have these predefined entries. Okay, let me just mute everyone again. Alright. I'm not sure what is going on, guys. Someone is not on mute, and I've been trying to. Guys, back again. All right. Seems like the noise is subsided. Managed to mute whoever had the background noise. But in any case, guys, I think the one issue that we're just having today is network, right? So I'm actually doing this at my place, so I think that's the issue. I'm not doing it at the office, which the Wi-Fi is way better for some reason. So just bear with me, guys. It's just for today. Okay, so next session should be sorted and should be back to normal. In any case, as I was saying, we're looking at predefined, right? So what you want to do is you want to have as pre-planned as humanly possible when it comes to your trade setups, because a lot of times you might look at a trade setup and be like, okay, you open up your chart, and the very first chart you open, you see an opportunity, right? What seems to be an opportunity, and then you get into that opportunity, and as soon as you get in, it just moves the opposite direction. I'm pretty sure we've all experienced that, okay? And end up being in a position where you feel like you shouldn't have taken it, you know? I don't want to say you start kicking yourself or cursing yourself, but I mean, I know I've been frustrated by myself in those situations where I've taken sort of like the bait, as you would call it, to get into the market that I hadn't predefined as, okay, an area where I hadn't predefined that I'll be getting into. So the moving average helps us to determine where that entry is ideal, because you just want to be taking ideal trade setups. At the end of the day, when it comes to trading, right, or when it comes to anything really, there has to be a lot of planning if you want to make things work in the long run. So if we're talking moving average here, right, the moving average itself is something that we can actually see, right? It's on the chart, we can actually see, and it explains to us the actual average of the price, right? It just gives us something visual that we can look at and make then trading decision based off how it moves. Right now, I've already explained the breakout above the moving average and below the moving average and how to spot the ranging market, which is a sideways market that's not trending, just by looking at the moving average in line with the chart, or in line rather with the price action. So if you have this type of movement, let me just move back again. Okay, if we have this type of movement, let me just go to the daily. Just go to the daily and find something. Right, so if you have this seems like a bit of noise, and you're not quite sure if the price is above or below. It's just the moving average is just in between the two, and we're not getting any clear directional bias. But that's when we know that the market is ranging sideways, and therefore we should approach the market in a ranging sideways type of mentality. Instead of us looking to play the trend, right, or the trend game, what we can then do is pick out from our strategy set a strategy that really works well in ranging markets. So instead of looking for the breakout and retest in like this one, for example, right? So this bounces, forms resistance, and bounce comes into retest, and then we buy there. We're not looking for that. We'd rather wait for either a short at a resistance or a long at a support structure. Okay, that's how we would handle a and that's just me being very vague about it, because I'm not talking anything related to tools that we might use or that we have to use in order to find out if the trade itself is a high probability one or a very low probability one. And in effect, what you want to have every single time, right? Every single time you take a position, as in every single time, like every single time you take a trade, you want it to be a high probability trade setup. And that is simply because those high probability trade setups will pay up over time. Okay. If you start mixing things, you get random results. Right? Random results are frustrating because you're gonna make money this week, right? And you're gonna feel like you're on top of the world, you got that Ramaphosa in you, and then the very next week you start losing money, and then after, let's say, just before the week ends, you make a bit of money, right? That instills a bit of hope in you. So if you've had a bad week from Monday through to Thursday, and then on Friday you make a bit, let's say you lose $1,000 Monday through to Thursday, and then you make $100 back on Friday, you're like, yeah, I'm coming back. Like that's the mentality that we all play into. Well, we all used to play into. Some of us don't play into that anymore, but that is the results of using random things, right? Not having an idea of what trade setups are the highest probability trade setups and consistently executing according to that trading system. You don't mix. Today, you're not trading the 1 minute strategy on broker killing brokers, whatever the case is. And then the next week you're trading something else. I mean, you have to have a sense of consistency. We will still look at back testing and how to find out without any sort of like fear or favor. If we're going to trash a trading system, we're going to trash it, right? If you do back test and it doesn't work, it's crap, then just throw it away. But if you take it properly through the back testing phase and it works in the back testing phase, then it's worth looking at in forward testing. If it fails in back testing, and just because you got duped into buying a system for 10,000 or 20,000, whatever the case may be, and you test it, it doesn't work. So you just kiss your 20 grand or 10 grand goodbye. you know, but because you have to be realistic about what works and what doesn't work. Because one thing that we will be doing, which will instill a lot of confidence, is knowing that a system works. Nothing gives more confidence than knowing that the trading system that I'm actually using actually works consistently. It might be you might test from 2010, right, through to 2020. You might test from 2015 through to 2020. You might even go back as 1992 or 1990. I think some charts go back as far back as that. But at the end of the day, you're going to have the confidence to know that it actually does work, right? So that's what we're going to be doing a lot of. And back to our moving average example, I mean, you can go back as far as you want. When it comes to the moving average, right, you will see the moving average, especially when the market is about to turn or head in a different direction, not necessarily change trend, but even a minor retracement. You're going to see the price coming into that moving average, right? Just like we saw right here on the 4-hour on the GBP CAD, that is sideways consolidation. That is a lot of noise, right? It's a bit better on the GBP CAD because even noise like this actually pays out. If we look at the daily, at the weekly, right? So the weekly pip range on the 8th on April was 220, right? But this is like sideways consolidation. In most markets, if you see a market doing this, there's no reason for you to be trading anything. If I see the Euro CHF moving sideways, I can't squeeze nothing that can pay for anything when it comes to the Euro CHF trading sideways. But in some markets, like the GBP CAD, like the GBP AUD, those volatile markets, the GBP USD, all those markets, you can still make some money off of them, but you have to take the sideways or the ranging methodology. Okay. Because if you start to look at the markets and say, all right, the market is always going to do this. Okay. Or the market, I would like the market to do this every single time. Trust me, no strategy works in every single market, in every single currency, in every single asset class or instrument or whatever the case may be, in every single time frame and all of that. So you want to actually optimize as much as humanly possible, right? But also take into consideration some real-time trading. So in this example, if we're looking at this GBP CAD, right, it ranged, this is a few weeks, 1, 2, 3, 4, 5 weeks, and it somewhat broke out, right? We had a break above that 7,500 level, right? For the older guys who've been with me for the past few months, they'll basically know the importance of this 75 even level. Okay, when I see that, I'm like, yeah. And from that point, this is this is one session, 8 hours, 190 pips to that high. That's 225 pips. Okay. And if you drop down, let's say, just use this tool over here. Let's drop down maybe to the H1. Okay, I think I went too far back. All right, there we go. Okay, guys, I think I'm going too far back. Let me just find my home button. See if that's gonna work. Okay, but what I want you guys to see is the actual trade setup as it would look on the smaller time frame. Okay, doesn't seem to be going any further than this. And the trade setup actually happened in May, I believe. Okay, there we go. All right, so taking this into consideration, you can see, if you guys realize what I just did there, I was just looking at the 4 hour time frame, right? I think it was a 4 hour, and I saw that resistance, okay, this 75 even level, okay, and I was like, okay, let's drop down to the smaller time frame and actually see what happened there. Because I could see, obviously, when you've used the moving averages for any period of time, you get a sense of where they are, even if you don't have them on your charts. I'm not sure if that actually makes sense. So if I were to delete this moving average here, this 200 moving average, if I look at a chart, a fresh chart, I'd be like, okay, the moving average is probably somewhere around this price or around this area over here. I can tell if it's below, if it's above, if it's probably within. And just by looking at it, you get to a stage where you're like, okay, this definitely hit the moving average. Now, as you can see, with this trade setup, we had that 75 even, which was ice cold. You see the 7,500 on the GBP CAD. I mean, this is beautiful, guys. And we had that 200 moving average bounce. Right now, in this instance, it worked at as the resist, there's a support rather. Okay. And price rejected. And you can see previous level, boom. If you go on through to the higher time frame, you see how solid that previous support structure actually looked. Market broke above it, came in back to retest. And if we throw in our Fibonacci, I am almost certain I can bet my left toenail that we are between 50 to 62% on the Fibonacci retracement. Boom. And that would have been our high probability trade setup. Okay. If you got it, that would have definitely been a decent payout, because from entry to swing high, first take profit, boom, second take profit, boom, we out. Okay. And total, if you just had one position, that's 160 pips. Very simple, straightforward. You don't need to do a lot of thinking behind this type of setup, but predominantly most of the time, this is what you're going to want to see actually happening. Okay, you're not going to want to see something that is, is it going up? Is it going down? I mean, I get people who ask me questions like that. I mean, I don't mind questions. It's just that, I mean, I'm more worried about you than me. If you ask me a question like, I'm looking at this, is it going up or is it going down? I mean, you have a big problem if you can't really decide if the market is going up or down. I mean, that should tell you that you shouldn't be trading that particular market, because it's either it's very, very confusing to you, or it's probably just ranging sideways and not doing anything. But you have this sense of, or this urge to want to trade that market, right? People have favorite markets. I don't care about markets. I don't have a favorite or least favorite anymore. I mean, as long as it pays money, that's all I'm concerned about. As long as it pays money, I can grow my portfolio using it. It really is not important to me what asset class I actually trade. And just to touch on, I mean, I've been getting a lot of questions regarding the VIX, right? The fear index. I know it as a fear index. I think first came into contact with it probably 3 or 4 years ago. Okay, I'm not quite sure which book. Probably 3 years ago. Definitely 3 years ago. But I was reading a book, and it just explained what the fear index actually is and how institutions actually use that to gauge market panics and stuff like that. So I think it was what's this book, Market Wizards. Someone was talking about the VIX. I'm not sure if it's the new Market Wizards or hedge fund Market Wizards, but I was reading a book and then that popped up somewhere there. So, I mean, I've been getting a lot of questions regarding that. And I will say again, guys, I don't trade it. I have no experience trading it. But if you do want to trade it, I mean, I'm pretty sure most markets will generally move the same with minor variations. So I'm pretty sure you can throw in a moving average. If you trade that, I mean, by all means, knock yourself out. Throw in the 200 moving average and throw in the Fibonacci and just look at the candlestick patterns themselves. But what I will say as a side note is that if the Euro CHF or the Euro USD is kicking your ass right now, then if you go to the VIX, it's probably going to kick your ass right now, right? Unless you become a better trader. Right? The only solution to make money in the markets is not to try and find an easier market, okay? It's for you to become a better trader. That's it. Right? When you're a really good trader, you can trade any markets, any instrument, and you can figure out any sort of situation that you're in and come out on top each and every time. So you don't have to run around and just try and pick this market because that person is trading the NASDAQ and that, I mean, most guys shouldn't be trading any index in any case because of the funds that they actually have. So if you don't have a lot of funds, just stick to the currencies, right? Trade your Euro USD, your Euro CHF, all those markets, right? Be familiar with them, right? Focus your energy and your time on sort of like, I don't want to say mastering them, because I don't actually believe that there is such thing as mastering the markets. You master yourself more than you master the markets, but you have to know them in and out. I mean, like the back of your head. So the markets that you trade, they need to be something that the top of mind each and every single time. And you don't get sidetracked by this person posting the VIX and posting a couple of blue numbers and stuff like that, and that entices you to try and trade the VIX. I mean, 2020, guys, we're over that. So yeah, as I was saying, any market you can actually trade. We'll look at a bit more in terms of examples at a much later stage, in actual trade examples where we actually have everything in check. So up until today, right, to today's session, we have covered the moving averages, right, which is this session, and 2 sessions ago we did the moving average, right? And previous session, we actually did something that was not on the plan. I was supposed to do moving averages last week on Thursday, I believe, but I did not do them because, I mean, I've been having a lot of questions regarding what lot size should I use, and some guys sending me screenshots of their trading accounts. And I mean, you see $100 trading account and you see the lot size being used there. I'm pretty happy when everyone is making some money, but it doesn't mean that I'm going to condone recklessness just because I feel like, I mean, I'm supposed to be happy that everyone is making some money. Because no one ever actually is going to come back and say, right, I actually blew that account that I showed you I tripled in 2 days. And yeah, so it would be a nice story for me to tell everyone that so-and-so made 3 times their account in 2 days. But if you look at it long term, I mean, that's not a strategies that actually work. So if you missed that session, go back to it. It's the previous session that we actually did, the previous YouTube video link that I posted in the group. Okay. As I promised you guys, I'll be going in depth into the money management strategy or the money management model that we actually use to sort of like create a buffer when you first get your trading account going, and then you can just crank up the volume from there, right? You can sort of like crank up the risk because you are quote unquote playing with the market's money, which is much easier. Because I know someone who just recently did a withdrawal. They did really well on their account and they withdrew their initial fund. There's nothing wrong with that. I mean, it doesn't show anything that like you're not confident in yourself, but for some people it works that way. It might take the edge off, right? You take whatever funds. If you had $1,000, you make another 1,000. You take your initial 1,000, you leave $1,000 to trade off with, right? You probably take that 1,000, not do something silly with it, but just put it to good use. Okay, so if that is the approach, then I mean the trading strategies and all of that stuff, that is the easy part. Okay, because I do believe that next session, not next week, we're going to be doing the big figures, right? That's the big boy stuff. And once we're finished with that, we are done with the strategy, and we'll just look at examples, get the trading plan done, and yeah, just put everything together for the next couple of weeks. Okay. So, I mean, that's just about it, because this was sort of like a tidying up session for the moving averages. There's a few things that I felt like I missed in the previous session, and I thought I should cover it here, and a lot of stuff that I didn't plan on saying, right? But obviously, I just usually say whatever's on my mind at the time. So I hope that it actually does help, because I've heard guys say that we not just focus 100% on the strategy, guys, but we also just want to be business people in the way that in which we think about trading, as opposed to gamblers or get rich quick scheme type of mentality, right? Business people, they'll make the wealth, the riches, the millions, the billions over time. But obviously, trying to take way too many shortcuts and try to make things happen right now is basically going to have the opposite effect. So yeah, I think with the moving averages, that's about it. We use 200 as well as the 800 EMA. And I did hear that people didn't receive the ebooks that I've been sending out. Okay. We did have a minor issue with the mailing service. I think it was last week, but they unbanned the account. So I'm pretty sure we are able to send emails out again. It's just that sometimes the emails just get sent through straight to to the spam folder. Okay, so you might just want to check spam or search Amplify Trading, right? And it's probably going to pop up there. And just add it to your address book, so every time we send emails and stuff, it doesn't go through to that folder again. Okay. All right, guys, we have about 5 minutes left in tonight's session. Are there any questions that you'd like me to answer regarding what we're doing today, or probably something that we did in the previous couple of sessions? Anything at all? Okay, so if you have a question, just type it, or you can just raise hand. I think there's a button somewhere there. I'm not quite familiar with it, but there's a button somewhere there where it says raise your hand. You just click on that button, the hand pops up, I'll see it, and then I'll unmute your mic so you'll be able to speak. Okay. All right, I don't see anything coming through. So if we don't have any questions today, I'll end off tonight's session right now. And tomorrow I'm going to be doing the beginners session. I think we're on module 3 or module 4. I have to check. And then I'll send through the PDFs again in the Telegram channel for those who didn't get it via email. Okay. All right. Thank you very much, guys, and enjoy the rest of your evening. I'll see you guys tomorrow. Okay. Cheers.